Good afternoon and welcome everybody. This is Bernard Wolfsdorf, your host and moderator today. A beautiful day, March 11, 2014, almost springtime. This is the first in our four-part series, our immigration webinar focused on EB-5 green cards. We will be having a second seminar scheduled and let me give you all the dates. That'll be, the second one will be on May 13, the third one will be on June 12, and the fourth one is currently scheduled for August 13. So this is our four-part series. We have two of our regular participants, Mr. Jor Law, securities attorney par excellence. Jor is absolutely expert in corporate arena and corporate and securities arena. Mr. Kevin Wright, our resident business plan, economic analyst, and everything else type guy. Kevin is somebody I work very closely, knows everything there is to know about EB-5, and I enjoy working with him. Thank you, Kevin, for coming on board today. And our new and special guest, Mr. Reid Thomas. Those of you who are involved in the EB-5 arena, you already know Reid. And the reason you already know Reid is NES Financial is the corporate entity that effectively handles Reid. What is it? You have over 200 EB-5 projects that you've handled in the last few years. Is that correct? 200?
Yeah, that's right. That's exactly right.
Wow. And when I talk about handled, you know, there's this critical element of taking care of the escrow, making sure that the progress of the payments is carefully monitored all the way through. Reid's going to fill us in and be our first guest speaker, explaining exactly how the process works from a regional center perspective. But Reid, you're probably also involved in some direct or standalone projects as well. Is that correct, or you just handle regional center projects?
No, we've done both direct as well as regional center, ranging in size from single investor direct projects to projects over $750 million of EB-5 money.
That is staggering. I see a lot of the projects seem to be getting bigger and bigger and bigger in terms of the capital raise, but with the increased popularity of the program, that is no surprise to us. By the way, folks, I have far too many materials here today. There's no ways that I can cover everything that we have under Hot Topics, so I'm going to try and take care of our guests first and outline exactly what's going on. Now, for those of you who had the opportunity to join USCIS on February 26th, there was a USCIS public engagement. This was the first one that we had in almost a year. And the good news is I sensed a positive development. I sensed an attempt to try and get the program moving even smoother than it currently is. And we're going to talk about some of the snags and some of the problems that we have to deal with. But first, we will start off with our very, very special guest today, Mr. Reid Thomas. So, Reid, tell us a little bit about the Executive Director of NES Financial. Tell us a little bit about what is NES Financial, what do you do, what are the services that you provide in the EB-5 arena?
Yeah, thanks, Bernie, and good afternoon, everybody. Our company was founded with the notion that we could use technology to deliver services that make highly specialized financial transactions safer, more transparent, and more compliant. So what we do is we configure our technology solution and go right after the types of transactions where banks might be a little bit nervous or hesitant to hold this kind of money, where there's the potential or a history of fraud and abuse, and where there's significant reporting or compliance requirements. And you know, when you think about EB-5, there's relatively few banks that are comfortable with this type of money. There's a tremendous amount of reporting, as you would expect from any government initiative at all, and the whole thing's just pretty complicated. And there's been unfortunately some history of fraud and abuse in the sector. So we partner with banks. Banks act as escrow agent and hold the money, and then we deliver a comprehensive suite of services on top of that. So we become the interface to the regional center or the direct issuer, and take care of the escrow part, the fund administration, fund tracking part, as well as the tracking of the immigration process.
Reid, what are the market trends currently in play in this arena?
Yeah, the world is changing here in EB-5, and just, we're seeing dramatic changes just in the last 18 months. So first of all, in terms of what's going on in the market, there's been a tremendous growth in the number of regional centers. I think we're approaching 500 approved regional centers now. The amount of visas that are getting approved are approaching the limit for the first time ever. As Bernie mentioned, there's some large projects in the works. And the processing times overall are continuing to get longer by CIS. On the other side of things, because of this growth, we've got more and more regulatory attention being paid to this, more oversight. We've got broker-dealers entering this space. There's new rules that are applying. And then on the investor side and project side, there's still the sort of low cost of capital, but it's critical to get money into the project quickly, and that puts tension on the fact that the processing times are so long. And of course, investors are getting more and more selective in terms of the projects that will invest in. They're doing a great deal of due diligence. They're looking for more transparency, more reports, more statements, and so on. So all of this is pushing on the issuers to sort of up the game, if they will, from an operational perspective.
So, Reid, let me understand this. Most of the audience, not all, we've got regional centers online. They know how they would use your services. Regional centers need to contract with you concerning the administration of the particular project. But you have a pretty good flavor of how this works. You know pretty much all the players. You know many of the major projects. You work with pretty much everybody in the industry right now, so you have a clear understanding of where this program is going, and we certainly seem to see you at every single event, whether it's the IIUSA or the immigration lawyers events. You're the sort of central person between the project and the investor per se, in terms of administration. So tell me a little bit about EB fund administration life cycle.
Yeah, I think some folks early on underestimated this. I'm sure the immigration attorneys never did. This is an immigration program, and investors are investing with the hopes of having a positive immigration result at the end of this thing. From a developer perspective or regional center perspective, obviously, there's a relatively low cost source of capital here, so folks are eager to get the money into the project. But it's much more long term than just raising money and dispersing it into a project. What this chart shows is the life cycle of what's really going on. The investor's wiring in $500,000 typically. That money goes into a subscription escrow account at a bank. And in the old days, we'll talk more about this, but in the old days was released once that person's 526 was approved. Today there are different sort of algorithms for that. The investment then needs to go into the new commercial enterprise. The money then needs to be used to create jobs, and ultimately the investor gets a return after the 829 is approved. And so that's really a 4 or 5 year journey, and there's a tremendous amount of tracking detail that's required to make this all work. Unlike traditional fund administration, where the focus is on, what's the return on my investment from a financial perspective, this is really about immigration result. And so tracking evidence to support that the money was spent in the way the business plan said it was going to be, that the jobs were in fact created, and the money was managed correctly, is really a very sophisticated process. And so upping the game on fund administration is key.
So, Reid, the 829 stage, the removal of conditions, Some people could call it Judgment Day. Either your 829 gets approved and you get your full green card and you move on to citizenship, or your 829 gets denied and you get put into deportation. How wonderful. So then you get another crack in front of the job. But you're the guy who's going to help give us all the documentation, or a lot of the documentation, that we're going to need when we file the 829 to show the money was spent, that promises that were made in the business plan, which Kevin helped prepare, were in fact kept. That is part of the function that you do, but you are also the person who's effectively holding the money, releasing it into construction, making sure that the money is spent in the correct way, or are you just releasing the money to the specific project, to the new commercial enterprise?
Yeah, well, the way we set it up is that, back to the theme of security and transparency, our company is never solely in control of the money, so we set up using best practices and procedures to make sure that the money is moved correctly from bank to bank, from account to account, so that the investors achieve the maximum amount of protection, while also the regional centers benefit from the improved tracking and administration and storing of documents and so on that we provide. Because at the end of the day, it's about the 829 is the big deal, and there's a lot of evidence that's required at that stage, as you certainly know, Bernie. And by starting off by setting this up correctly at the beginning and tracking it correctly all the way through, there's a higher likelihood for success at that point.
So one of the concerns that we have at the present time, with the potential for Chinese retrogression being very real, and with the extensive delays in adjudicating 829s, 829s were supposed to be adjudicated in 6 months, but something like a year and a half is the current published time. So before you get that 829 approval now, it may not be 3 or 4 years, it may be 5 or 6, or hold your breath, everybody, maybe even 7 years. How does that impact what you're doing, Reid?
Yeah, this is a big deal, and the fact that we've been involved with so many projects gives us a unique perspective on the market, and we can, just by monitoring our client base, we can track, I think, trends that are probably representative of the industry as a whole. So with the sort of explosive growth in the EB-5 program, processing times at CIS for 526 approvals for sure, and others of course, but for 526 approvals have risen dramatically. And so the dotted line on this chart here shows that, back in early 2010, the processing time for a 526 was, under 6 months, 5 months or so. And you can see as it sort of steadily climbed all the way up to the fourth quarter of 2013, where it was recently posted on their site as being at 22 months. And so the effect that has, obviously, is pretty dramatic and puts, I think, everybody at risk in the process here. The investors obviously want their money protected and their money to be safe, because everybody promises to refund the $500,000 in the event the investor's 526 is denied, right? Everybody promises that. So investors are looking for escrow to hold that money. On the other hand, the developers need the money into the project so that they can stick to the schedules and timelines. And it's not a win for the investor if the money's sitting in escrow and the project fails. So what's been happening is the types of escrow structures that are getting implemented are becoming more aggressive in terms of the release triggers. And so there's a trend towards what we call early release escrows. And you can see that's the solid blue line here. And you can see that back when processing times were 5 months or so, there was no pressure to do early release escrow. So the money would sit in the escrow account until the 526 was approved. But as the processing times have increased, you can see just along with it, the processing times the pressure for early release type triggers has also increased to the point now where it's representing probably about 50% of all the projects that we're seeing.
So, Reid, the kind of early release you see is a release upon approval of the first 526, or what are the triggers that you are seeing release 526 approvals? What are the typical releases that you are seeing in the market right now?
Right. The next slide might be a good way to discuss that. There's really a spectrum of escrow structures that are being deployed. On the one hand, it's always important to remember that there's no law that says an escrow account has to be used, and there are some issuers out there that are able to proceed and implement projects without using escrow. On the other hand, 526 approval is what used to be the norm and is in many ways the safest for the investor. But with the processing times, it's tough to do that in all cases. So the middle three categories here represent the types of early release structures that we see being asked to be implemented. And when you start thinking about early release structures, there's really two categories of reasons that a 526 could be denied. One is that there's something wrong with that individual investor. Say the investor's source of funds doesn't hold up, but the other investors might be approved. The other reason is that there's something wrong with the project itself, in which case all investors would be denied. And so there's different structures that sort of pivot off of those two things. If the project is approved, then you can look at the USCIS website and see what the typical denial rates have been over time and implement some type of holdback, if you will, to cover the odd denial here or there. And that's a relatively safe implementation. So we see a lot of that where somebody will wait for either a project exemplar to be approved or an I-526 approval or some number of I-526 approvals before they start releasing money into the project. On a more aggressive schedule, we'll see folks try to release money prior to project approval with some type of holdback, or we've even seen folks asking for release on filing with no holdback. So we see these types of structures being implemented, and to various levels of success, frankly.
The market is becoming increasingly sophisticated, Reid. I think we have over 80% of the market right now, Chinese PRC nationals, and many of them are represented by very sophisticated brokers, and they're kicking the tire. They're really trying to find out, what's the scenario here? What kind of escrow do we have? What kind of security does my client have? Are you finding and seeing this trend as well, with the market becoming increasingly sophisticated in terms of demanding protection to ensure that if something goes wrong, their money will be secure?
Absolutely, and the next chart sort of reinforces that point, where, you also need to consider the types of escrow structure you're implementing, because it does impact the marketability of the project. The agents and brokers out there are quite firm in terms of what types of projects they will sell, because they feel obviously an alliance to the investors and want to make sure the investors are appropriately protected. And so depending on how you set it up will impact the marketability, which then impacts how much it costs to raise the money and how much time it takes. And this chart, again, measured across our customer base, sort of shows that trend, where, so first of all, I categorized relatively new issuers here, not the guys who've been doing it for 15 years or so, but folks that are relatively new to market, which is the majority of folks, given the explosiveness in the growth of the industry. And the dark line in the center sort of plots the average of all of our customers, regardless of whether they're doing a hold until approval or an early release type structure. Whereas the dotted yellow line is the hold until approval, the more conservative escrow trigger, and the dotted gray line below is the early release structure, one of the types of structures that I discussed earlier. And what you can see is that the amount of funds that are being raised for hold until approvals relative to the target raise is greater in the hold until approval model versus the early release model, and the time to raise that money is faster in the hold until approval model. So that needs to be considered, because those types of things impact marketing costs. Now, money can start to be released into the project earlier in the early release model, as you can see shown there, but you really got to consider the overall benefits of it. If you can structure your project in such a way that it can deal with the realities of the the EB-5 program, then that's a pretty good answer. If you can't, then you need to consider the extra steps required in marketing the project.
Now, many of you who are immigration lawyers, you're like looking at all of this and say, wow, you know, what has this got to do with what I do? But if you're going to get into the EB-5 arena, again, you've got your direct and your standalone projects, and at the same time, you've got your regional centers, many of them getting bigger and bigger and bigger in terms of the projects that they are handling, and you have to understand the nitty-gritty. You have to understand the basics of what it is the consumer wants to see, what it is that is effectively going to make those projects work. People keep using the word due diligence. Well, you have to ensure that there's limited risk here, and that's when you start working with companies such as NES, who are absolutely critical within the framework of the EB-5 arena. So, Reid, what are the kind of expertise and specialty skills that one needs to be involved in this business?
Yeah, right. The key thing here is that EB-5 is highly specialized, and so it's not the kind of thing where you can just walk into a bank branch on a Monday morning and walk out an hour later with an escrow account open. It's a very sophisticated and very specialized and requires a lot of expertise. And when you think about it, it's really because of these four reasons here. You know, the investor motivation is very different in EB-5 than it is in traditional investments because they're focused on the immigration results. The stakes are high. You know, I think $500,000 for anybody is a lot of money, but they're also personal, to Bernie's point. You know, if something goes wrong, these folks find themselves in deportation hearings. That's a little different than when somebody loses their money on the stock market or something. In this case, they're actually in deportation hearings, which is obviously a very traumatic thing for them and their families. The regulations seem to be constantly evolving, and they're, again, highly specialized. There's, you know, some guidance that's provided from time to time by CIS and others in the industry, but staying up on what the current regulations and rules are is a full-time job. And then finally, the tracking requirements extend beyond just the money. It also includes tracking the documentation that's required to make sure there's a successful immigration result at the end.
So, Reid, part of the data and information that you're providing is you are showing how many 526s have been approved, how many 829s have been approved, where the case is in terms of visa processing, whether the person has the green card. So you're providing some form of metric which is critical to the potential investor. Well, I suppose it's critical to everybody, quite frankly, from the project to the attorneys to the investor, but you're providing absolutely vital data that will help potential investors evaluate the project and determine where they are in the case. Is this in fact where they are on the project, or in the case, where is this in fact moving forward? And that helps evaluate risk. I know that's about 25 questions rolled in one, but is that the kind of thing that you help provide as well, Reid?
Yes, exactly. When you think about, you know, the theme of this call, which is hot topics in EB-5, you know, the game is changing. The competition is increasing. Regulatory oversight is increasing, and that puts pressure on issuers to operate the correct way, to A, remain compliant, to B, properly service their investors, and to C, compete. And tools like this have been created to help enable that in an efficient way. It helps regional centers or issuers operate more efficiently. It helps them service their investors better, and it helps provide the level of professionalism that is, I think, increasingly becoming required in this space.
Well, Reid, just judging from the quality of your PowerPoints, I mean, I'm embarrassed. Fortunately, my PowerPoint is right at the end of this, so I don't actually have to compare my PowerPoint to your PowerPoint. You've got professionals doing this, and you should see me doing the cut and paste. Boy, everything you do, Reid, is just so professionally done, so perfectly done. You really are the type of guy that we feel comfortable with in working with in terms of managing the money, controlling the data, and providing valuable information. And NES Financial has sort of established itself. Hey, I don't even get paid for these kind of plugs, Reid, you know, but you have established yourself as the platinum standard for providing these services in the regional center industry. And, you know, it's just an absolute pleasure to work with you. There's Reid's contact information, Reid Thomas at NESF Financial in San Jose, 1-800. Reid's got a very qualified team. I've met many of his staff, and they are very serious players. Reid, if you could stay online, because we will be opening up the chat line so people can ask questions, but I want to get moving because we've got so much material to cover here. So I'm going to jump over to my good friend Jor Law from Homeier Law. By the way, if you go to sort of EB-5 conferences, you see the same old cast of characters at each one. You see Reid's always there, Bernie's there quite often nowadays, Jor's there, Jor's partner, Mike Homeier is there. Same old players together with my good friend Kevin Wright, who's going to come in afterwards and talk to us about business plans. So let's flip over to Mr. Jor Law, and Jor is with Homeier Law. So Jor, we're dealing with hot topics. We're kind of going to jump all over the place today, give people some highlights on what's going on in the EB-5 arena. So Jor, tell us, what are the typical characteristics of an EB-5 versus a regional center?
Well, you know, this is just kind of a, you know, idea because, you know, these days direct EB-5 is getting some more recognition than it used to in the past. And in the past few years, regional center projects have really dominated the EB-5 marketplace. And, you know, maybe in the last 6 months to a year, we're starting to see more and more people getting very interested in direct EB-5. So I think there's a lot more interest.
No, please continue.
There's a lot more interest than there is actually projects, but in general, the chart here kind of will demonstrate the key differences. You know, with a direct EB-5, you know, you could only count a direct job. You know, unless you have a regional center connected, you can't count the indirect and induced jobs. The direct EB-5s tend to be smaller deals. They're not always small. Sometimes they take a whole bunch of small deals and put them together to make a bigger deal. But simply because of the job counts, the direct EB-5 deals tend to be smaller. Because they are smaller, they're often easier to implement. Not because they have less documentation requirements. It's just that most people for a smaller capital raise will generally not want to spend as much. So for a direct EB-5, you know, one clear savings is that you won't need an economic study. But another savings is perhaps you'll take a chance on the disclosure documents and you won't have a PPM, which is a private placement memorandum, essentially a document that discloses all the risks of an investment. And for other reasons, you know, go ahead.
No, please continue, Jor.
Okay. And then, you know, for other reasons, you know, direct EB-5 tends to, you know, be a one-entity structure, so it's a little bit simpler. You know, usually the investors will put money into the company that is the newly created enterprise and also the job, you know, creating enterprise. And usually it's just a straight equity. They put in money and they get, you know, certain percentage of the company or certain units of the company in return. And the regional center is, you know, everything opposite of that, which you'll see in the chart.
So, Jor, I mean, the general idea at the present time is I think most people feel that regional centers are still sort of chewing up at least 85, 90% of the total EB-5 numbers in terms of demand. The majority of people just find it a whole lot easier to put your $500,000 into a specific project, and from an attorney's perspective, it's a whole lot easier putting those cases together and filing the regional center cases because you already have most of the documents already prepared for, let's call it the first case or for the exemplar case. However, in the direct scenario, the amount of work that is required for the immigration attorney is a whole lot more. Now, for you, the corporate and securities lawyer, it's just the reverse. With the direct, there's a lot less paperwork that's required, but with the regional center and setting it up, for the major project, there's a ton of additional work. Not getting too lost in the weeds on this, the regional center framework is still the overwhelming largest portion of this particular program. I think the numbers are certainly over 80% at the present time. But as you point out, direct is becoming increasingly popular. Jor, two questions. Question one is, most of the direct EB-5s that you see, are those franchise-type businesses where somebody is selling a specific franchise, or are you seeing a certain number of what I'd call pooled, or what everybody calls pooled investments, where 3 or 4 people get together, 3 or 4 friends or businessmen in China, for example, get together and they each agree to put in $500,000 or $1 million, as the case may be, and start a new business? What are the structures that you're seeing in the framework of direct? More franchises or pooled investments or a combination? What are you seeing, Jor?
Yeah, most of what our firm sees happens to be kind of non-franchise direct EB-5 investments, where sometimes the investors are being pooled, but sometimes it's just a company that's looking for 1 or 2 investors, and the investors don't know each other. So just small private capital raises of small restaurants, business opportunities, small manufacturing businesses that are looking for a little bit of capital to grow. There definitely is a market of franchises out there. Five Guys, Burger King, a whole bunch of folks are doing franchises on a larger scale. So each individual investment is quite small in the pool, but they aggregate a large number of investors for many franchises. But our firm tends to see more of the non-franchise deals.
Yeah, we see a combination of both franchise and non-franchise. I know the restaurant model is particularly popular right now. So, Jor, give us a breakdown very briefly of the kind of documentation that's required for a direct or standalone, and then just very briefly again, the kind of documentation that you need for a regional center.
Right. So if you look at the chart that's on the slide, you'll see that it's roughly the same. The big difference is going to be in the regional center, because you don't have a regional center. You don't need a business plan or economic report for the regional center itself. And then also for the regional center, because the structures are usually a little bit more complicated, you may have extra investment or loan documentations that's involved, and also, of course, you may need a sponsorship agreement or some sort of agreement that links the regional center to the actual project. In every other case, the documents are roughly the same. You have a business plan, you have the entity formation documents, the company documents, operating agreements, or bylaws, or shareholder agreements, etc. You've got the investor questionnaire, generally in any case. Sometimes you can skip that by hiding it within a different document, or if it's a very small private raise. Bernie and I are working for a small firm now, and her sister invested into her own company. In that case, you don't really need the investor questionnaire. It's quite obvious that they know who the investor is, and the securities exemptions you would need for that are quite clear. And same thing with a subscription agreement, escrow agreement. Those are desired documents, but oftentimes in smaller deals, such as this one I just mentioned, there's not going to be an escrow agreement. But there's not going to really be a subscription agreement. In fact, her sister already gave her the money. And of course, the PPM offering memorandum is a disclosure of the risk of investing. And typically for smaller deals, especially where the parties might know each other, they'll usually opt to skip that document. Not saying that they should, but sometimes the business decision outweighs the legal advice.
So, Jor,
in both cases, yes.
Yeah. So, Jor, the investor questionnaire, of course, is to ensure that the investor is, in fact, a qualified investor in order to provide certain SEC exemptions, which may, in fact, form the basis of the offering, and that, is absolutely critical in the regional center context and is perhaps required in the direct, but can, in certain occasion, be skipped. Kevin, I know you're listening, and if I can just jump to you quickly, in the listing of documents required, Jor is explaining we need a business plan. This is a matter of a whole business plan for the regional center, as well as a business plan for the project, and as well as an economic report for the specific. We may need various feasibility studies as well in the regional center. And then we have the business plan that's required for the specific project. Can you give us a basic outline of the differences, Kevin, between the business plan that is required for the project in a regional center and the business plan that is required for an EB-5 project? What are the sort of basic differences between these two, Kevin?
Well, the differences between a regional center project and a direct project are not that much different. Each one really needs to have good, strong feasibility and point to comps in the business and follow the matter of hoe guidelines that are set out. The major difference is the fact that in a direct project you don't have an economic analysis. So instead of a section that's describing an economic analysis and going through indirect job creation and so forth in a regional center project, in a direct project, you're going to have more detailed listings of every job position, how much the people make, what are their job duties, what hours will they work, really going to show that they are going to be full-time employees and that they do directly work there. And then also verification of the fact that you're not overstating that. So some kind of third-party feasibility or verification of some kind that says, well, if you're doing a McDonald's, then you should have this many people working there, and you're not just making up an astronomical number to get more investment.
Kevin, very helpful. Folks, this is absolutely critical because in the direct situation, you're doing head count. So you're counting your 10 employees. Maybe at the time you file, you have 2 or 3 or 5 or 7, and you're going to have to show how you plan to hire 10 full-time employees or full-time workers. That is a whole lot simpler than in the situation in the regional center where you are relying on the indirect jobs and you're effectively relying on various inputs to show, in fact, that those jobs will be created indirectly or induced jobs. So the business plan becomes just a whole lot more complicated, and in addition, you need feasibility studies, third-party verification. We're going to go into those in some considerable depth as we get further into the process and into this webinar. We are now live with Mr. Jor Law from Homeier Law, corporate and securities lawyer extraordinaire. And I don't know if I pronounced that one correctly, but let's go over to the direct EB-5 structure, Jor. What is this? I like this one a whole lot more than the one you were giving me a few months ago with all the spaghetti chart. Explain to me how this works within the capital raising entity in the project company. Give me the structure here. What is this slide telling me, Jor?
Yeah, first off, the blue and the white, that's just a shadow effect. It's actually just one entity. And all the investors on either side are going into the same entity. All this slide shows is how most direct EB-5s, not all of them, but the overwhelming majority of direct EB-5s are structured like this, where the company or the entity that's raising the money from the investors is also the company that's actually doing the business and creating the jobs. And that's all this slide is really meant to show, that there's one entity, everyone's going into it.
So this is the NCE or JCE, the new commercial enterprise or the job creating enterprise is effectively the single company. Investor puts their money in, 10 jobs get hired, 10 people get hired, you file your 526 and bingo, you get your approval. So talk to me a little bit about the regional center framework.
So the regional center framework is similar in some cases, and different if there's another model. So on the left-hand side, you see one structure. And that one structure is exactly the same as a direct EB-5 model, except for that company's registered to become a RC and been approved to be an RC. So nothing else has changed. That's less common. In maybe about 3 years ago, that was more common. But these days, what you see more often is that the investor goes into a newly created enterprise that is the new commercial enterprise, and that you see as the capital raising entity on the bottom. And then the regional center acts as a general partner or a manager, depending on what form the capital raising entity is, or it provides contract regional center services to the capital raising entity. And then, that's the core of the regional center model these days. And then there's variations on it. For example, the capital raising entity will often drop down and make a loan or investment into the job creating enterprise. And here you see the slide for that. This is what people call the loan model. The loan model dominates EB-5 right now. And in this slide, you just see the investors coming into the middle layer, the general partner, or it tends to usually be the regional center or some entity that's controlled by the regional center. And then the capital raising entity makes a loan to the project company, and it's at the project company stage where the jobs are created.
So, Jor, the general reason why the loan model is more favorable is that investors, and we were talking about how the more sophisticated Chinese investors, they now not only focusing on getting the green card approved and making sure that this is a solid business, but they also want to make sure that at 5-6 years down the road, they're going to get their money back. And rather than have an equity model where, the money just sits in there until the business is sold or refinanced, the idea of the loan model is very appealing to many of the folks in the market. However, the equity model is still alive and well, and there are still equity projects. How does the equity model structure vary?
So we've gone over both structures already. So this slide is really just the left side being the traditional equity model, and the right side being the traditional loan model. And the key difference for investors really is that in the U.S., when you are a creditor to a company, you're typically ahead in line than the equity. So if anything goes wrong, typically the folks that the company owes money to, its lenders, will generally receive that money back before anyone will make any money off the equity. There's a benefit to the investor there if that's structured correctly and if the loan is worth anything. However, there's also a benefit to the project company. In many project companies, they only want the EB-5 investment. They don't really want random EB-5 investors that they don't know from foreign countries coming in to their business as shareholders. So a loan model is very clean. Instead of having someone come in and actually own part of your company, you can just have them come and own part of a different company that makes a loan to your company. And then when you repay that loan, they're out of your company. No one's ever really kind of gotten in and messed around with your company that much. You treat them as any other third-party lender.
So, Jor, if we're going to set up a regional center, obviously we need to work with a corporate and securities lawyer. What are some of the considerations that need to be considered when you're setting up a regional center in terms of management and in terms of setup?
Yeah, the key advice here is to realize that it's not rocket science, and EB-5 is not completely new and completely different. From a corporate perspective, when you set up a company, it's still an LLC, or it's still a corporation, it's still a limited partnership. So you still have the same entity choice questions that anyone would have. And when you're setting up a RC, you have the same, if you're doing it with the founder, it's the same founder considerations you have with anyone else, and the same management concerns. You have to realize that when you set up a RC, your agreement with your partners will kind of be very similar to you setting up any other joint venture with anyone else. the key difference, of course, is going to be how the nuances in EB-5 affect everything. For example, the general preference that the limited partnership vehicle is used for projects over LLCs and definitely over C Corps is very prevalent. And there's a reason why, kind of outside of EB-5, so many people use LLCs and C Corps and S Corps. And then within EB-5, no one uses S Corps. Some people use LLCs, but most people use LPs. And different things, of course, the deals focus on job creation instead of profitability sometimes. And in general, what the investors want in the marketplace are slightly different from what investors in the U.S. May want in the marketplace. So you have to custom tailor a little bit how you set up your regional center, how you set up your projects, and how they're attractive. Here's the key advice, really, which is, use advisors in all the existing tools you would have used for your industry. And think then for advisors that know EB-5 to come and bring them into your other team as well, because at the end of the day, your key business for most people is not going to be EB-5. The key business is going to be the underlying project, the underlying opportunity that creates the job. EB-5 is just a form of financing. So typically you wouldn't ever, typically you don't ever really want to forget that, because no company in the world really structures themselves around financing solely and nothing else. And in EB-5, I'm afraid that many companies have structured themselves with EB-5 as the primary focus, when really the primary focus has to always be the underlying business.
Jor, that's really, really helpful. And, from an immigration attorney's perspective, it's very, very important to work as a team. Even if you are doing a direct case, you have to work with the corporate and securities lawyer, you have to work with the business plan lawyer, and I've explained you also have to effectively work with a company such as Reid, who is effectively holding the money, handling the escrow, releasing the money, unless it's a simple direct, and in certain cases it may be family or friends, and people will simply transfer the money directly in. But there's nevertheless a very critical administrative role, so that you can monitor each stage of the case, make sure that you have all of the appropriate documentation. And the immigration lawyer, or at least the knowledgeable immigration lawyer, can effectively act as the general manager or the quarterback, working with these various folks in a team. So that is more or less how it works, depending on the particular case. So here's Jor's biography. Jor is a Columbia grad, very, very smart lawyer. I enjoy working with him. The only thing is he does have a wry sense of humor. So for those of you who enjoy a wry sense of humor, this is the man to go with. Jor, you need to update your thing here. It says that you were best lawyers 3 years in a row to 2011. Come on, surely you made 2012, 13, and they just announced, I think, 14 as well. I think they're trying to sell me some kind of new plaque there in Best Lawyers. They want a couple grand. Maybe you stop paying them, so they're not going to give you Best Lawyers for 2013 and 14. Pardon my bad sense of humor, everybody. There's Jor's contact information, jor@homeierlaw.com. I do not get a commission for plugging Jor, but I do have the privilege of working with this man, and I can tell you he's a real pleasure to work with, knows his stuff, corporate law, securities law, business transactions. Jor's the man. So let's go over now to Wright Johnson. Wright Johnson, professional authors and analysts. I work quite a lot with Kevin Wright. He's the guy I call up every time I get stuck or confused, which is quite often. And there's Kevin's telephone number. Kevin has a great team of people to work with. The president of Wright Johnson, Aaron Goforth, is my sort of daily person that I bother when it comes to answering questions. So, Kevin, in terms of, and we're now into the indirect, and by the way, talking of PowerPoints, the PowerPoints that we have here is something I just asked Kevin to put a few points together for discussion purposes. One of the biggest hottest issues that we're dealing with today is verification of inputs. The whole question with regard to indirect or induced jobs is showing that your inputs, you spend a certain amount of money, you have a certain square footage, you pay a certain salary, you generate a certain amount of revenue. These are classified as inputs, and based on these inputs you're going to project that you will create 8,600 jobs. So tell me, Kevin, what sort of verification of inputs is the government searching for nowadays, driving me crazy, making my gray hair more gray or even falling out? What kind of verifications are we seeing on the RFEs, both for regional centers and for both for regional center approvals and for particular exemplar approvals? What are they requiring and how are they driving us crazy?
Sure. Well, basically what you need to do is they require that you verify the inputs to an economic analysis. So the reasons for this is you're getting a credit for a tremendous amount of indirect jobs, and what determines the indirect job creation by the economic model is the input to the model itself. So, for example, in the construction side of things, the input to the model would be the amount of hard costs spent on the project, or FF&E costs, or some certain soft costs, architectural and engineering spending, and you will input the amount of money that the project developer will spend on that for that use in the project. So if the developer were to overestimate those costs, then significant indirect jobs would be overstated. So instead, the USCIS is requiring that you verify these costs through different methodologies. One is RS means, for example. That's like a construction guideline book that's published every year. And they also have a website where you can estimate construction costs. So you can compare locally in your area. If you say, or your developer says it costs $10 million in hard construction to build this hotel, but RS means says it only costs $6 million, then your developer is going to have to come up with a reason why it costs so much more money to build there, or it will be rejected. Now on the operating side, you have inputs of either direct job counts. You may say, my McDonald's is going to have 25 people working in it directly. You can input that to the economic model, and maybe it comes back and tells you that you're going to get an extra 20 jobs indirectly, so you get credit for a total of 45. In that scenario, you would need to prove some kind of source that says that you really need 25 direct employees in the McDonald's. That might be a franchise agreement or plan provided by McDonald's. It can be an industry report that talks about the number of employees per square foot in a restaurant or a quick serve restaurant. It could be a feasibility study. The feasibility study is kind of the gold standard for most projects like hotels, assisted living, larger projects, because in that you have a third-party company who's dedicated solely to just providing these reports, and typically would be viewed as much more credible in the hotel industry, an HBS or a PKF. And they're going to take an in-depth look at the local market, all the comps, all the competitors, the occupancy rates, the ADRs, all the metrics that really generate the amount of revenue that a hotel might make. Now, revenue tends to be the input to an economic analysis in a larger project, such as a hotel or assisted living facility or hospital or other type scenario. So once you input the revenue into the economic model, it will compute for you both the indirect job creation and the direct job creation. And since it's done through a model, even though they're direct jobs that the model is basically calculating for you, it's viewed as indirect. So all jobs are indirect to that revenue. So that revenue being the input to your model is very important because it has to be very accurate. Otherwise, the job count is going to be way off. So again, they're going to look for you to verify it.
So Kevin, you're kind of focusing right now on the very, very critical element of regional centers, which is the aspect of proving indirect or induced jobs, which is where all the action is. In the direct context, it's basically very simple. We have 10 full-time employees for every 500,000 or million, but in the indirect, in the regional center, we are focusing right now on indirect jobs, and the critical element, the biggest, hottest arena where the government has been very active for some time is they want verification of inputs. They don't just want a letter from the construction company or a letter from the architect claiming that this is in fact what the job count is going to effectively be based on this expenditure. They want independent documentation which they can rely on. Now, Kevin, in the very recent scenario, we've all heard about tenant occupancy and the government's concern with job relocation, the government's concern if you were doing shopping centers and you were trying to count the jobs of the tenants, the government's concern was, well, you know, if you didn't put the shopping center here, it would probably go up somewhere else, and those jobs are not new jobs created, they're merely relocated jobs from one side to the other. They want to actually see that jobs have in fact been created based on this investment. So this is a hugely, I don't want to use the word problematic, but critical area from a tenant occupancy perspective, where if you were doing commercial developments or you want to count the jobs of your tenants in your shopping center. However, many of the projects today seem to be hotel projects. We see a surge of interest in hotels, casinos, etc. And at the very recent USCIS teleconference, the government for the first time, it's not so much articulated, but seemed to accept a similar concept relating to inputs or expenditures, and that is the concept of guest expenditures. The USCIS outlined 3 circumstances where guest expenditures could be taken into account in terms of computing the number of jobs that will be created, and this is hugely beneficial. So fill us in a little bit, Kevin. How does this guest expenditure thing work in the hotel context in order to do the job count and extrapolate the number of jobs that will be created based on that expenditure, which at the end of the day will define how much money you can in fact raise. The amount of jobs, of course, has to be 10 direct or indirect jobs. So if in fact you can create 8,600 jobs, you know, that's 400 million plus raise. If you can only, you just simply divide by 10. So if you're going to do 500 jobs, then effectively you can do 10 jobs each. I'm a lawyer. Dividing by 10 is not very easy, but effectively you're going with a $50 million if it's $1 million each. So Kevin, explain to me how the guest expenditure works.
Sure. So as a basis, guest expenditure is the idea of taking, if you have guests that come to your hotel, they don't only spend money in your hotel, they're on vacations, business trips, and so forth, and they spend money in other areas outside of your hotel, in restaurants, they rent cars, they take airplanes to get there, they go to the amusement park, they buy souvenirs, and so forth. And a lot of states nowadays, especially your larger states, they do comprehensive studies on this every year that show basically how much money somebody spends on lodging versus outside restaurants versus car rental and other such things, you know, as they take a trip. So typically a hotel straightforward economic analysis, you would input the amount of revenue that the hotel is going to generate, and then you would get credit for direct and indirect jobs from that. But guest expenditure says that you also want to take credit for the spending that's going to happen away from the hotel. And that's a dramatic difference that can make your job counts go up as much as 400%, because typically your hotel guest is only spending 25–30% of their expenditure on that trip in the hotel, and spending 70% of it outside of the hotel. So if you're allowed to count that spending, then you get an astronomical boost in your job creation, and you can get a lot more money in an EB-5 investment. So the question becomes, though, well, what, and USCIS has posed the question, is saying, well, how do I know that a person, if you didn't have this hotel, wouldn't still come to the same area and just stay in a different hotel and spend the same amount of money anyway? So you shouldn't get credit for those jobs. And that got to be very contentious for a long time, and not many of those models were being approved for a while. You saw it happen in Portland and a couple other places. But they wanted very detailed analysis of why it is that if your hotel is not built, that these people couldn't just spend their money in another hotel and wouldn't still come to the area. Now, in the recent stakeholders call on the 26th of February, they defined that a little bit more, where they basically gave examples of types of scenarios that they would allow. The one being, if you're building the first one-star hotel in an area that has only five-star hotels, well, then there are a lot of people that can't come to the area because they can't afford to stay in a five-star hotel. So in that case, you would be able to count their visitor spending in the area. And the reverse is also true in an area where you're building a five-star hotel where there's maybe only 1, 2, 3-star hotels. I think,
that's what that's what they described as some kind of unique demand in that particular area, where the demand is not being serviced in that particular area.
Exactly. Another example they gave was that what if they're building a new sporting venue or expanding a convention center, and you're building a hotel specifically to serve that venue? Then in that case, let's say you're building a hotel that's attached to a convention center that's being built somewhere. Well, then the obvious intent of that hotel is to have a place for the convention goers to stay, where they might not otherwise have a place to stay. So that's another area where if you can prove that the specific convention center or sporting event complex created a new need for this hotel, then maybe those people wouldn't go to the area or wouldn't have a place to stay. If not, so they've said that's an example that you could use. Now, other ways that you can evidence this are things like occupancy rates as well. You may have another five-star hotel in an area that you want to build one in, but if their occupancy rate is 95%, then they're turning away a lot of guests who would have come to the area, but they can't come because there's no rooms available. Now, there's no precise percentage that says it has to be 90%, 85%, or what the comparables on the occupancy rate are, but it's safe to say if you have a 90% occupancy rate, then that hotel is turning away a lot of people, and there is a need for more five-star hotels in the room. So that's another way to evidence that there's a need and that guest expenditures should count. Same thing in convention center bookings. Let's say you have a convention center that's expanded, and the hotel being built, it might be across the street and not connected to the convention center. But if you can show and clearly see that the bookings at the convention center are already pre-booked and they're going to be going up by 150%, and you can show how many, that the 75% occupancy rate in the area for hotels already, and how that convention center's bookings is going to affect that, and prove that there is a need for more hotels in the area, and that if you don't build more hotels, then people can't come to the convention center and can't spend money in the area. That might be another example where visitor spending would be allowed, or guest expenditures.
Kevin, you really are adding a lot of clarity and transparency to something that is otherwise quite complicated for a lot of people. The government is looking towards objective, clear standards, and you basically spoke about 90–95%. The bottom line is, and I don't think we should sort of talk about guest expenditures an easy concept. If you only have 70–80% occupancy rates, it may be quite difficult to, in fact, use this model, but it is certainly promising that guest expenditures may also be factored in these limited situations, which would allow you to increase your job count. Now, I did a little bit of math just before we started on this slide, and I was saying, well, if we have 500 jobs as the projected and accepted indirect job count, that effectively with 10 to 1 we have 50 slots. If that is $1 million project, then we're looking at 50 investors. Of course, 98% of the projects are in fact $500,000 slots. So the bottom line is that we would only have a $25 million raise if in fact we could only create 500 jobs. So if it's 500 jobs, we got a $25 million raise. If it's 1,000 jobs, we effectively only going to have, so you've got to factor in that $500,000 is the norm that in fact we have at this point. Kevin, let's keep going. One of the biggest concerns we were having in, I believe it was October 2011, the government introduced a Form 924, the most expensive form in all of USCIS, $6,230 to file a 924, and we went ahead in October and November and we filed these cases in November with using the new form, and some 1 year, 2 years later, many of these applications were still pending. Our gray hairs had got a whole lot grayer. Kevin, is it true that some 924s with hypotheticals are now getting approved within as little as 3 or 4 months?
Yes, we see a lot of that now. The move to Washington, D.C. seems to have taken a very positive effect on 924 applications, or new regional center applications in particular. With, I've seen it myself, and then, have just in talking to some of the other immigration attorneys around the country recently, there's at least, 7, 8 cases within the last 3 or 4 months where regional centers were approved in under 4 months. Had another one approved in 3 months just 2 days ago in San Francisco. So we're seeing that hypothetical approvals of regional centers on that standard are going much, much faster. We also see that even on an actual filing, you can see that the average times are more like 6 months, whereas a year and a half ago, you might have been waiting for some people over 2 years to have that approval. The move to D.C. seems to have tremendous effect in efficiency there.
Kevin, can you briefly distinguish between, you were talking about 3 or 4 months on a hypothetical, that is with, let's just use the word dummied down version without any of the specifics that we were talking about going into the weeds. Can you briefly distinguish between processing times on a hypothetical, which we said were 3 or 4 months? I still wouldn't tell any client 3 or 4 months. That is something new that we are seeing. The government's promised to keep those down. But give us a distinction between a hypothetical, an actual, an exemplar, and also a guesstimate of how long those type of approvals are likely to come out of Washington, where, by the way, all 924s are now processed out of the Washington Immigrant Investor Program Office, IIPO.
Sure. Well, basically you have 3 categories you can apply for a regional center with. One is hypothetical, where you're simply applying for a regional center designation, and the projects that you're submitting and doing business plans and economic analysis for when submitting for this are not real. They're hypothetical illustrations of the types of projects you may do one day. So they don't need to conform necessarily to the matter of whole and have to have all of these stringent requirements in the business plans and third-party feasibility studies, which cost tens of thousands of dollars. And they would contain more general predictions. You may use, say, a STAR report to verify occupancy rates, for example, in a local area, where you can pull one of those reports in 24 hours for $200. Whereas a feasibility study would be required on a more significant filing, and that may cost $25,000. So On those standards, you can put together projects very quickly on paper and do analysis of them and get approvals much more quickly. We see it all the time in 8 months, and now we're having evidence showing that they're getting done in under 4 months. Whereas an actual filing differs because you're asking for the government to review the business plan and the economic analysis of the project that the regional center application is based upon, and to sort of give a pre-approval of that business plan and economic analysis, or show deference to it, so that later on, after you get the approval, the letter will state that this business plan and economic analysis have been approved as they stand, and you can go out into the marketplace and rely on the fact that USCIS will show deference to that approval and that it will stay, it'll stand, so that you can go forward and market and realize that your project has, in a sense, been pre-approved on those 2 documents. Those take a little bit longer. That's like 8 to 12 months currently to get those approved, because you generally are going to get some kind of RFE on something, and they want to make sure that all the I's are dotted and T's crossed. And then you finally have an exemplar approval where not only the business plan and economic analysis are being pre-approved, but also all the offering documents. In that case, you have a complete package of pre-approved documents that you can take to the marketplace and tell your potential investors, listen, we know that this project will be approved and that you're going to have no problems because we went ahead and we took the time and got these pre-approvals done. Now those tend to they have a much more detailed RFEs and have to be done very carefully, and a lot of things have to go on, so it takes longer to prepare those applications and more documents and more money, more time. But the approvals on those tend to come in probably 12, 13 months usually at this time, and that's kind of the difference.
So the bottom line here, Kevin, is we basically have 3 types of 924s at this point. We have the hypothetical, which is great. We get an approval in 3 or 4 months, but there's not a whole lot we can do with it, because at the end of the day, the sophisticated buyer is looking to see an actual approval with a particular project. Either they want to see a 526 that's already approved, or they want to see an exemplar that's already been approved. They want to see some kind of results, and those, of course, are going to take a whole lot more. So it's not realistic to really anticipate that you're going to go to market within 3 or 4 months. You still have to anticipate at least a year and a half before that is realistically going to be ready to find qualified buyers. Is that a good guesstimate, sir?
Yeah, I mean, I certainly think it's an advantage when you go out to the marketplace and you have these things put in place.
But there are certain types of projects which may not have them, but they have such credibility behind the developer, behind the regional center. They have a good track record, that what you're telling me is that it might be possible to start marketing that project to an investor even without a exemplar approval, based on the track record of the principals who are involved. Let's jump over. Sorry.
No,
yes.
Go ahead.
No. You, sir.
Oh, no, I was just going to say that, one of the things to think about is that, it is something to think about to do the actual or the exemplar when you're filing for the I-924, because it gives you a chance to do 2 tracks at once, to get a marketing advantage in the fact that you're getting some pre-approvals along with the regional center that's going to take a while anyway. Whereas you don't get that chance the second project, third project, fourth project going along. Anybody who owns a regional center and then does their second, third, fourth project, the majority of those people are not going to get pre-approval. They're just going to go straight to market because they're not going to wait an additional 9 months to have documents approved when they are already approved to go hit the marketplace right away.
This is the realistic problem, that you need to get that money in. You need to get that money into the construction. The hotel needs to get built, and the timing problems that we have, both with the release of the money that Reid basically spoke about up front, and then, of course, the concerns that we have with regard to the 829 approval. That's a new area of concern. If 829 approval is going to take 5 or 6 years, particularly with potential Chinese EB-5 retrogression, then there's problems of whether or not the individual can be paid back the money before the 924, scratch that, before the 829, the petition to remove is in fact approved. Kevin, briefly, there was some concern that RIMS 2 is no longer available. Can you briefly explain RIMS 2 was a favored economic input methodology, Implan and Redine or some of the alternatives? How are we functioning without RIMS 2 at the moment?
Well, I mean, at the moment, you can still use a RIMS 2 analysis and have no problems with it. The idea is that the government came out and said they weren't going to support it anymore due to the cost, and that the data wouldn't be released going forward. Now, you can still use the last year of data that was available and go forward, and as long as the economist deflates correctly for the passing of time, then at least for the short term, those models are still fine. Now, but not everybody in the industry, or especially on the other side of the world, has the same confidence in that or can understand that. So they may look for the idea of switching to a different model. And the other models used are generally Redine or Implan. And those models continue to support the data. Implan has even come up with a hybrid model that runs like RIMS 2 using an Implan system. And those are going to be good for the long haul and forever as private corporations. They're not going to lose funding, and those companies are doing very well these days, so they're not going anywhere. But I would still say you're going to be fine with RIMS 2 for another year or two. It's just the perception in the marketplace you have to think about.
So for the entry-level folks on this call, this is the critical area of indirect job creation, and we're talking about economic modeling so that we can extrapolate the number of indirect jobs that will be used in addition to direct and induced jobs. Kevin, one of the very positive things that came out of the USCIS engagement was clarification. Actually, this was in the May 30th memo as well, was very, very clearly outlined what I would call a generous policy on bridge or mezzanine financing, interim financing, which the government seemed to create a position which was quite reasonable as long as bridge financing was anticipated and that it was anticipated that EB-5 money would be used to replace the bridge or interim financing, that would be applicable. What is the latest and hottest information with regard to bridge financing?
Sure. Well, basically, you just said it that, based on the May 30th memo, that the bridge financing now, as long as it was contemplated in the beginning, is totally acceptable. And how that fits in with an economic analysis is, the government states that you have 30 months to create the jobs. So you have to write an economic study that says, okay, here's the 30-month window we're contemplating. Where bridge financing allows more flexibility is the fact that now you can count 30 months going forward, and then also, but if the 526s haven't been approved and it takes a year to get them approved, and bridge financing is allowed, and the project starts before any of the approval, then you also are adding time to your 30-month timeline. So effectively, you can count 40 months, maybe 42 months of job creation because it's allowing you that extra cushion of time because you have a go-forward position of 30 months, and now you can take advantage of the going backward jobs created as well using the bridge finance.
Very interesting. And just to understand where the government gets this 30 months from, the statute is very clear. The jobs have to be created within 2 years, and they estimate that the 526 will take 6 months to process, so they add the 2 years to the 6 months for the 526 processing. In reality, of course, this is not correct. In reality, 526 processing has not been taking 6 months. In fact, the government has recently in that stakeholder call indicated that an average processing time was about 11 months. Many of our colleagues are complaining that in fact petitions are taking over 2 years. In fact, if you go and look at the USCIS website, you see that we're stuck on that March 16, 2012 date. So the official publish time is close to 2 years. But in reality, many of the decent projects, particularly those that have already got approvals, are getting decisions within about 6 months. So some of the good projects are getting approved within 6 months. However, the government did caution that in the process of moving from the California Service Center, and that is all 526s have been moved from the California Service Center to the Washington processing facility, and it could in fact take longer to get an adjudication, but as of the present time we are seeing approvals within a period of about 6 months on certain cases where there are certain what I'm going to call decent approvable cases. Sadly, there are still, unfortunately, many cases lingering. There are over 7,000 cases stuck in the system. Folks, I'm looking at the time. I'm understanding that we have been online for quite a while. Our topic today is EB-5 Hot Topics, What's News. There is your moderator, Bernard Wolfsdorf. At least that's what I looked like about 10 years ago. I've since got a lot older and grayer, but I think it's still legal to use an old picture. This is the firm, Wolfsdorf Rosenthal. I've got a new partner, Cliff Rosenthal. Don't know how he puts up with me. Over 20 of us lawyers here, giving myself a little plug. That's how you get hold of me, Bernard at Wolfsdorf, wolfsdorf.com. There's the telephone number. It says a whole lot of blah-bitty-blah things about us. And we were talking about what's new. I am not going to go into everything that was new. I'm going to touch on very, very quickly a few of the juicy pieces, just recognizing your topics, and then we'll open up the chat lines and try and answer many of your questions. If my fellow guests are still online, this program has become increasingly popular. The February 26th engagement had Dan Rennell, former Vermont Service Center director, who's running the show on behalf of Field Ops right now, the new head of the program, Nicholas Colucci, chief of USCIS Immigrant Visa Processing, his deputy, Robert Cox, who's the acting deputy chief, seems to be the hands-on person actually making many of the decisions. So what are the hot topics we have right now at the moment? Well, what is the impact of these new folks coming on? Chinese visa retrogression, the other big hot issue, the September 30th sunset, that is certainly an issue. Will Congress extend it? They have on many occasions in the past. So Dan Rennell effectively running the program on a day-to-day operation. Those of us who've been in immigration for many years are big fans of Dan. I think he's done a phenomenal job. One of the important organizational changes we've seen is that the government in its May 30th memo published a 26-page memo which really outlines where we're going, how we're going to get there, an excellent attempt to put everything into one particular document. The government's talking about publishing new regulations, publishing updated guidelines. We certainly need them. Mr. Carlucci, the director of the program with a background in financial crimes enforcement network, that certainly says a lot about what the government is looking at. People who want to jump into this field to get rich and defraud potential immigrants better wake up. Mr. Carlucci knows what he's doing, and certainly is not the person that I would want to go to battle with, an experienced expert in the particular arena. So we have effectively the IIPO, the Immigrant Investor Program Office, which is fully operational. They are doing all the 526s at this point. They also have FDNS, fraud detection officers on site. They only have 53 officers at this point, including 20 economists and 25 adjudicators, 7 PhD candidates. This is, scratch that, 7 PhDs. So they certainly have very smart economists and smart folks. What are the processing times? Those are average processing times. You know, they're still talking about 12 months for 924s, but my friend and colleague Kevin reporting 3 to 4 months on hypotheticals. Realistically, if you're talking about an actual or with an exemplar, anticipate minimum 12, maybe even longer than that, 15 months from your processing time. In transferring from the California Service Center to Washington, we effectively have 35 officers, experienced officers, drop from the program, which is going to result in a lengthier period of adjudication. So what are the adjudication statistics? I'm just going to cut down to the nitty-gritty here right now. 526s, over 7,000 cases pending in the system, with about a 15% denial rate, moving into the 924s, scratch that, the 829s, a 3.5% denial rate. So it looks like the government is trying to deny the cases up front rather than on the tail side to avoid putting people into deportation. The new ELIS system, this is like CBIS, we don't know how to pronounce it. Is it ELIS? Is it SEVIS? Is it CBIS? Is it ELIS? Is it Electronic Immigration System? Hey folks, the system is operational. They just didn't bother to tell us about it. Boy, talk about a stealth rollout. But the 526 system is currently operational. Go along to ELIS, have a look at the document library. This is going to make our lives a whole lot easier. Currently, when we file these cases, we're filing 12 to 18 inches of documentation, and this will allow us to simply upload all of the critical documentation that Jor explained in a regional center program or in a direct, then when you file the individual petition in a regional center, you merely upload the specific 526. There were a few comments about making sure that you have appropriate translations. I'm not going to go into all of this. This was the idea about creating an idea community, and we all going to log on and report what's working and what's not working, help the government find a solution. What I really like about the idea community is it shows the attitude of the government in trying to find ways to make this program work better. In the process, no more CSC receipts. Quite frankly, when you file 829s, you don't even get receipts. So this will be an improvement where we actually start getting some receipts with some sort of Washington connotation. So the goal for the program, approximately 75 people, plan to take it up to 100. What scared the whatever out of me is the idea that officers with only 5 weeks of experience are actually going to be adjudicating this. I've been doing EB-5 cases for some 20 years right now, and I'm always shocked at how much I don't know. And when I hear Kevin and Jor and Reid talking, I'm always picking up a nugget here or there. There's just so much information in this program, so much new information that you just can't cover it all. Kevin very kindly covered the difference between actual, exemplar, and the hypothetical. Thank you very much, Kevin. That is very, very helpful. 3 completely different animals in the 924 context. That is the application for regional center that carries with it $6,230 check. Verifiable detail, Kevin already spoke about that. Thank you, Kevin. What they want to see is feasibility, cost estimates, timeline for construction. The government just doesn't believe you anymore. They want to see the details. Something that I won't get into too much detail on, deference. This is absolutely critical vis-a-vis the project. So if you have a project and you have a single 526 approval on that project, it works pretty much the same as an exemplar because the government will then give you deference on the project. However, you can still have issues on the individual case, for example, source of funds issues and related. TEA designations, this is a very, very important recognition from the government on where the jobs must in fact exist. I'm not going to go into any detail on this. TEA is a very complicated issue. We actually had a webinar on that. These webinars are in fact on my website at wolfsdorf.com. A little bit difficult to find, but all of them are recorded. Those of you who don't know about TEAs, you really want to find that webinar with Elliot Weiner, the absolute expert on TEAs. And also for those of you who are learning in this arena, the new TEA data gets published in March and April. unemployment rates are falling in certain areas relative to the national average. That's going to create some headaches with regard to TEAs. You really want to get your TEAs locked in as soon as possible right now, because the improving economy is going to present some challenges as we go down the road. Geographic range of regional centers. The question is, how far out of that regional center can you go? Is it a contiguous project outside the regional center? Folks, I am going to switch over to questions right now. We have far too much material today, so I'm going to open the lines up. Those of you who have asked questions, I'm skipping through all of these slides. We've actually, the one issue that I haven't spoken about is the wonderful issue of EB-5 retrogression. Let me just summarize this all. This is a 2-hour topic. We'll have to do a separate webinar on EB-5 retrogression for Chinese. Here's my prediction, folks. I have no crystal ball, but I have been speaking to Charlie Oppenheim at the State Department, so I do have valuable information in this regard. It has been published through AILA. It has been posted on AILA's website. There it is, AILA document number 140-30645. Those of you who are not AILA members, here's the bottom line on this. My personal prediction is that we will not have Chinese visa wait line develop until July or August. We will get at least 1 month's notice, according to Charlie. Most likely August is going to be backlogged. September may be unavailable, but then it will reopen in October. And my feeling is that the Chinese retrogression for the beginning of the fiscal year, which is the first quarter, October, November, December of 2014, will not be too bad. Second quarter of the immigration fiscal year, starting January, February, March of 2015, I think we're going to be relatively safe. The scary time is going to come in the final quarter of the fiscal year, that is July, August, September of 2015, where visa numbers may not be available. And here's the scary part about it, because we also have a sunset coming on September the 30th. So the question of whether we're going to be able to lock in age-out kids without visa numbers becoming available is a very, very scary proposition, because the September 30th 2015 sunset comes at exactly the time that we are likely to see some Chinese visa retrogression problem. Let me translate this into English. If you are 20 years old as a derivative and your parents are about to file an EB-5, if they file that application in the next month or two, you're probably going to be okay. If you have a 20-year-old and you file in January of next year, you may have some problems because you are only allowed to deduct the time the petition was pending from the derivative's age. I do need to do another webinar on this issue so I can explain how the age-out works. There is reason for some concern, but as of the present time, the retrogression is not as bad as anticipated, and that is the unfortunate silver lining that is coming from the fact that there are over 7,000 cases stuck in the system. Let's do the math on this, folks. 7,000 cases stuck in the system. If only 6,000 of those cases gets approved, with derivatives, you have to do another 66.5% count. That means about 18,000 visas are required. 18,000 visas are required just to process the 6,000, 7,000 cases that are currently in the pipeline, not mentioning the large numbers of people who are applying on a daily basis. I realize I'm going much too fast here, folks, but to give you some idea, there are 1.4 million Chinese nationals who are millionaires. A recent survey showed that 60% of them would be interested in immigrating. United States being a top destination, Canada, I believe, was second. So the simple bottom line is the demand is extraordinary at the moment. However, Chinese visa retrogression probably won't show its face. Backlogs won't show their face until August or September of this year. With October 1, the new 10,000 visas coming on the market will substantially alleviate the problem. But in the third quarter of next year, we could see a serious problem as many of these pipeline cases start coming out, and with the program sunsetting at the same time, going to create a lot of anxiety. So, folks, a ton of slides and just too much information here for us to cover in one webinar. We'll have to put another one on. Mr. Tech gentleman who's standing here right next to me, let's take a couple questions here. And see if we can answer our guest questions. We'll take a few questions. Okay, we have, oh my gosh, we have a lot of questions. Okay, so let's see. Where's some good questions? Possible visa retrogression. I kind of dealt with that. The quota is 10,000. Is it fair to say that all other nationalities should not fear any possible visa retrogression? Yes, that's my good friend, immigration attorney. It is only the Chinese nationals who are going to be impacted by visa retrogression, so this will benefit other people. Let's go to our next question. In about to transfer money for it, do you recommend that I talk first to NES Financial regarding the escrow accounts? No, not really. That is really up to the regional center, is generally the person who is going to retain the companies such as NES Financial. The biggest benefit of direct EB-5 is the investor gets 100% of the return on the investment. Franchise operations have been a good investment for individuals seeking green card. I don't know if that's just a comment, so there doesn't seem to be any question. Is there a preferred corporate structure? I've heard that the LLC format is not loved by USCIS. It's not really a question of preferred structure. There's a winnable structure, and you need to make sure that you have the correct structure. The reason why LLP is formally preferred is that it is specifically mentioned in the regulations as a format, and the LLP, the Uniform Limited Liability Partnership Act, specifically limits the involvement of investors. So that is why the LLP had gained favor, because it was mentioned in the regulations, but the LLC is becoming more popular. How can a loan model be considered as an investment? Interesting question. There was a lot of concern whether a loan model would in fact qualify. Initially it was only the equity model, but the loan model has effectively taken over and is the name of the game as of the present time. So we don't seem to be having a problem with that. Bring more dollars to you now that can any move chat about U.S. increasing EB-5? You know, there have been bills introduced. Right now, the Senate passed a decent bill last year. I don't think we're going to see any immigration reform this year. We may see some piecemeal legislation moving on its own. My hope is that they will remove derivatives from the count and that they will extend the program either permanently or in 3 years. At the present time, we do not know the answer to that. So that is something we have to deal with. How long after you get your green card through EB-5 can you get out of the business or sell it? How about the next day? That would be just fine. Have you heard about EB-5 legislation recently introduced by Congressman Jared Polis? I was actually at a EB-5 conference So was Kevin, and I believe Reid was there just last Saturday, EB-5 Investor Magazine. Jared Polis was the host, and I was at a cocktail party, and yes, he just dropped his bill. I think Jared Polis's bill is absolutely excellent. There's only one problem with it. I do understand it does not have any legs, therefore it may not be walking anywhere. Jared, he did have a Republican co-sponsor. We wonder if that bill went through. Lots of hype about it, but not so interesting in terms of where we're going. Here's a question from a very good lawyer friend of mine. Jor's slide showed a single entity for Jor. I hope you're ready to stand by and you're still there. Jor's slide showed a single entity for the direct investment model. Don't direct investments typically have a U.S. organizer with an entity acting as a general partner in the LP? Jor, are you available to answer that? I know you put the simplified version. There's also that critical point that the subsidiary has to be 100% owned by that parent. But Jor, are you able to take this question, digest it, and answer it? I'm going to repeat the question. Jor's slide showed a single entity for the direct investment model. Don't direct investments typically have a U.S. organizer with an entity acting as a general partner in the LP? Jor, you still there?
Yep, I'm here. You know, we try to structure it with the LP where possible, and if if the clients let us, then that is true. However, what we've encountered is that generally for kind of the one or two person deals, it's easy to structure around the LP because the only reason that anyone ever uses the LP is to get out of the day-to-day management criteria. But if it's a small investor coming in, especially a friendly investor coming into a direct deal, oftentimes just putting them in a director position or giving them kind of a officer's position is not a big deal to a lot of companies. So there isn't always a second other company to provide the manager. The reason for the LP or the general manager or the GP is really because you've got a special purpose vehicle that's handling this. But in this case, where it's a direct offering and it's a small offering, oftentimes it's done without regard to kind of putting up a separate business.
Well, Jor, thank you for that summary. I noticed that as well. You had a more simplified version for your direct, nice and simple. Just put the money directly into the new commercial enterprise, which is also the job-creating enterprise, and nice and simple framework. But as our very informed questionnaire, who is a top-notch corporate lawyer himself, asked, how come we don't have the more complex option? So thank you for explaining that. I really like this last comment, and I'm going to take this as the last question because I think we pretty much are out of time. Wow, can I read this? Great presentation. Thanks a lot for providing such good referrals, getting to meet the other panelists. Well, thank you very much. That's my good friend from Las Vegas, quite an accomplished EB-5 practitioner herself. So we are all out of time today. Please join us again for our next webinar. We will send out notices to you. Encourage your friends. We had over 400 people registered for today's program. I don't know what the final count of how many people actually came on board, but the word is spreading that these webinars are actually very substantial. I can also tell you, and this is interesting, please don't email me on this, folks. I will send out the information to you, but we have applied for CLE credit that is currently pending with the California State Bar. We will eventually apply for a CLE credit for various other state bars. So not only can you listen to these free EB-5 webinars, get all your questions answered, but you can also get CLE credit. Please don't email me on this. As soon as I get that, I will notify people via email with regard to CLE credit. We're trying to roll that out if in fact it does get approved. So thank you very much, everybody. I've tried to cover far too much material in this, but I really wanted to give my guests, Reid Thomas, the absolute top player in the industry when it comes to escrow and managing the money and managing the flow of the money to the construction projects. He is the absolute expert. We had Jor Law, our corporate and securities lawyer, and we had my good friend Kevin Wright from Wright Johnson, and Bernie trying to squeeze in a few comments here and there. I do apologize for the fact that I do not know how to divide 500 by 10 and get the answer of 50. I did not have my calculator here, so making fun of myself, please pardon me, but obviously if you have 500 jobs and it's 10 jobs per person, effectively we have 50 slots. 50 slots with $500,000 each is a $25 million raise. So 500 jobs equals a $25 million raise. You want your developer to have some skin in the game of their own. It'd be wonderful if the developer is putting in 20, 30%. I have a project right now where the developer is putting in 50% with only 50% EB-5 raise. That makes it very good. The higher the percentage of EB-5 money in the raise, the more skeptical the market will be. And on that somewhat peculiar point, trying to correct my terrible math, wonderful having you join us all today. Thank you so much. Please spread the word. Come and join us for our next one. Send lovely comments about our webinars, and we look forward to having you on the next one. Thank you so much, everybody. Have a wonderful day, and I'm going to continue to be optimistic and Pollyannish that the program will thrive, grow, and succeed. It brings jobs, it brings capital. And on that interesting note, I wish you all well, and thank you for joining me today.